What's good? I'll give everybody a second to get in here just to kind of paraphrase what we're going to be going over. I took a trade this morning on the S&P RIP for not holding, but I've been trying out this 2R fixed. And then we're going to go over a loss that we took together on the NASDAQ. I have it grouped. I don't know why I had all that in that. Oh, wait, yeah, never mind. That is right. I thought I had that disappearing. So we'll go over the loss first. So looking back, well, we'll just go from the top and I'll kind of just give the bias. So in the morning, we obviously had formed a swing high here on the 1 hour. And we talked about this in the private class this past weekend about, whenever we're talking about day trading, we're going to be treating the 1 hour in a sense as our daily chart. And of course, we still use our daily chart, but we're going to be also framing our general, navigation of the markets around that 1 hour time frame. So we formed that swing high in the morning and got a displacement break of structure. So after we get this kind of price action, we know at some point we're going to, let's say we were probably still on this candle, maybe a little past it. No, it was right around there. So after we get that type of price action, and we look for a retracement oftentimes. Now, I think I went to a 15-minute and there was an order block right here that I wanted us to push back up into, and then it continued down. Now, the reason it was going to be a quick trade in and out was because we're in a premium of the 1 hour range and we are clearly drawing down lower. All right, because remember, if we are in a premium on the 1 hour and we formed a swing high and got our market structure shift, that tells us the market has the desire to go lower. So where is it going to go lower? It could be this gap, but oftentimes we're going to look for it to come under a premium. But I wanted to catch, just like we use this market structure shift for entries on the lower time frames, I wanted to catch the retrace into that order block, and then we'd see the market move down. Now, we didn't get that. That was the overall idea. And, what we had that liquidity raid, well, what was anticipated to be a raid of that low, and then got a market structure shift right here. So that gave the framework. I actually jumped on the 2-minute because I saw this tiny gap right here between these two, but I figured it'd be a little cleaner on the 2-minute. There was a pretty clean gap. So that was where I framed the entry around. We had, where's the play button for replay? I think it's actually right here. There we go. I changed it. So nice little bounce for a split second. Somebody somehow said they made money off this. I don't. More power. Wait, what the hell? God, trading view is just cancerous nowadays, I swear. Okay, there we go. We got entered in right there. Price moved up a little bit. It was just moving up into something in here and then kind of took us out pretty quickly. So a loss nonetheless, but part of the game. This was a paper trade up here. Ignore that. I just was kind of watching that. I did take a trade on ES this morning. This was pretty simple. I just looked at the high right here getting rated right with that opening candle. So we had that high getting taken and then that displacement break of structure. Now, you could have looked at this as that, but there wasn't really an entry there unless, for me, because I use fair value gaps, you could have used this rejection block. I see it. But I waited for a second displacement break of structure and enter in that fair value gap and just fix 2R. Kind of crying because it would have been a very nice move otherwise, but it's all right. 2R, the thing that's nice about it is you're in and out. There's not much thought about it. And with the funded account, it's still a nice little gain. I just had this question, how am I finding the 2R system? And also on my loss today, will I reduce risk or continue my current risk? I'm going to continue my current risk because I'm not in a drawdown. So if you're in a drawdown, like your account, that's whenever I think it's good to maybe decrease risk in half. That way you are able to kind of bounce back and, you're not going to spiral because, when you get in that drawdown, psychological factors come into effect and you begin to start thinking a little differently. Not everybody, and not everybody does that every time, or not everybody's perfect is my point. So if you get into a drawdown on your account, I think it's a good idea to cut your risk in half. I also took an ETH trade. Go over this last night. Can't remember where was it? Was this an old one? Was this? Yeah. So we took an ETH trade last night that got stopped as well. So I'm going to recap that. The bias for this was we took these highs right here. And also at this time, we had SMT divergence on Bitcoin in the lower time frames. Go back and show you what I'm referring to. Ugh. Too much stuff. Where is it? Yeah, it's over here. So we had Bitcoin making a lower high with ETH making a where is it? All right, this is the no, yeah, it's right here. ETH making a higher high with Bitcoin making, hold on one second, because this is looking weird. No, it was this right here. I knew that wasn't. I was like, wait, it was way more clear than that. It was ETH making that higher high right there, and then Bitcoin making that lower high. So I'm not gonna lie, I haven't had the greatest experience with SMT divergence in crypto. It wasn't the only confluence, but that was something that did catch my eye. It seems like I see people use it, but for me, it's been pretty inconsistent. But the main bias, or the, I guess, framework was we took the high. So not looking at Bitcoin, and we had just taken that high and then got that 5-minute shift in structure, and price was in a premium. Seems like the idea ended up playing out, but price, and this is with crypto, I kind of was looking back, and this is an example of when I say crypto doesn't really have the most efficient price action for at least for how I trade, because it never came back down to a discount. We formed a clean low right there. So when we came up into this order block, it seems like that was the right idea too. We had these equal highs, but again, price had not came into a discount. So we came up into that order block, and I was looking at this as a range that had a lot of untapped internal liquidity in the opposing market extreme. So oftentimes crypto will get these complex pullbacks where we'll come down, we might move up, come down, take out those early longs, and then make a move. But the idea was right, but just the trade failed. I mean, this one, looking back on it, to be honest, I would take this again, but so I'm not really too upset with it. It seems like it came up on one of these highs right here, because there were these general relatively equal highs that formed. But I kind of take stuff like that with a grain of salt with crypto, especially when it occurs with a liquidity raid, because I look at it as that the stops have already been taken, but it seems like it wanted higher. And that was, we got stop hunted on that one. Because if you look right after that, nice move down, and then still pretty dog shit PA, but because it came and took that high. But if you had a stop loss above the liquidity rate high, you'd have been good. So what's up, Adalik? I haven't seen you in here in a minute. USDCAD long at the fair value gap. Give me a time frame. One hour, I get, or no, there's not really a gap there. And there kind of is, but EU is clean as shit. I'll look at EU in a second. Take a peek at DXY. So we talked about this imbalance down here. This was in the daily chart. I tweeted about this last week. Kind of came back down into it. got that shift in market structure here. I will say it's not the cleanest, but we did get that displacement break above a high. Didn't really move all the way back into a premium. So I am still looking at this as a potential draw. Price is kind of pulling back away from it, but I see buy side above this high. And then we have a premium fair value gap here on the 1 hour. But we do have earnings reports all this week. I think Netflix and a couple other big ones are today. So we could see some volatility as far as, if earning reports come out, much better than expected or anything that causes a shift to the upside in stocks. We could see a fall in DXY. But overall, I would still look for this high to get taken. And that kind of goes hand in hand with what I want for indices, because I could see a little bit of a move up here, but overall, I still want to get this down here. Again, with earnings, everything's a little bit fickle, but just like we had this range over here, we moved up, kind of rated liquidity. Looks like we had, like a nice little 3 drive. Here we just rated it once, pushed down, and then I would probably look for price to return to this fair value gap. Let me hide this. Kind of had been trading ES for a while. I'm leaning a little bit back towards NQ. Kind of switch between them, whichever one is moving clearer. I like this fair value gap right here. So we came down, we filled that opening gap. Didn't necessarily come all the way back down to a discount. We didn't really tap into the body of this order block either. So I still would want to see more downside overall, but I could see a little push back up into this fair value gap. Not really much there on the lower time frames, though, I will say. But that's overall what I would like to see. Now, if we could get some kind of consolidation, maybe below this, and then raid liquidity up into it right after 130, and then start to get that move down, that would ideally be the move I would like to play. Because we are in a bullish range, but I still see the this imbalance down here as an overall high value area for longs. Group this. We'll recap this too real quick. What's today? The 18th. Obvious. And I didn't take this. I don't want to act like I took a win I didn't take. But this was a pretty clean little trade one. This was where 2R would really be nice for some. I mean, I can see where you would have wanted to take profit somewhere in here, but had this nice little 3 drive coming after 830. So you pushed above that 830 open, which was right here. Pushed above it, kind of took this liquidity and then that nice little 3 drive, market structure shift right there, and left a tiny little fair value gap. And you can see that very nice price delivery there. Right into it, and then down back into a discount of the move. Now, another thing you can do with 3 drives is you can measure the expansion up into the 3 drive, and this can be a little tricky at times, but then you'd look for OTE of it. And if you see, that's right what we got. So that can also be a helpful tool for taking profits. I just did I didn't, but I would have done a fixed 2R, just kind of paper trading. And I was laughing because I was like, this is a good example of when 2R can be your best friend, because, if you're not taking profits using the OTE and you're just looking at this as, which was right up here. You know, oh, we're forming a swing high, you know, pre-market, or because pre-market's been really the wave lately. This last week or two, seems like all the good entries have been pre-market as far as catching the big moves. But yeah, that's why I like the idea of just a fixed risk to reward. And it's different. Like I will say, you know, that could be different for growing a smaller account, but and like I've always had the mentality to try to like min max things, but I've learned after I got funded that if you do that, it really just, especially with being funded, because there's some, you know, there's a lot of trades that like I've been in where there was some pretty decent numbers that got erased by just holding too long, because I was like, hey, you got to hold to that TP. And I was, and that is, you should hold to your TP, but my TPs were always extended. And, you know, overall it was still working, right? Like I was still profitable, but I would see, you know, a couple grand get erased in 15 minutes. And that just, you know, I know myself, that puts me in a really fucking bad mood. And then I won't lie to you and act like I'm just like perfectly, you know, everybody has errors. Most of the time are psychological. I know myself, and I will be not in a good mood if I see that much money erased. That's and I've learned that about myself. Maybe that'll change. I try to work on it, but I also think it's really important to evolve with yourself as far as your style and your strategy goes. You need to know what works best with you. And that's another thing we went over in the private class this past weekend, is that not every style is going to fit you. And I don't mean because your lifestyle or your time availability, but you as a person, your personality. Now let me look at some of these questions. Okay, so EU is the first thing you said, Vanch. Interesting. It took the London high, which would lead me to look at it as not the highest probability sell day. There's probably a nice opportunity off of that. I would have probably missed this one because it never moved back into a premium. Yeah, I mean, I get that. And this is what we were talking about this yesterday in the stream, or I don't know if it was yesterday or when, but you can come back to these POIs that are sitting at equilibrium and it won't come into a premium. I personally like to just kind of pass on this. Like I would have had something like this as far as the sell goes. I would have had something like waiting for that. And that would have been a miss or for me, which is okay. This is a daily fair value gap for those that are wondering what it is. So now I look at this as we kind of came up and we've taken the buy side, we've taken that external liquidity from the range that we created. So now I'd look for a retrace down here to a discount. Now look at the 15 minute and see if I see anything. I mean, it's a little deeper discount, but I think you could, if we start to shift down and hold it, I think you could see this 97725. It's that fair value gap on the 1 hour. LMs and thoughts on waves. I haven't looked at this one in a while. Yeah, it's pretty dead. I won't hold you. This is not where my interest would be. Now that I say that, it'll run 300% in a week, but I mean, the next area I would look at would be, we do this. I'm just going to mark it and then OB. Tap that. No, I would overall look for these lows right here. just based off the weekly. Pretty gnarly 1 hour range. I mean, yeah, the 1 hour range you have is theoretically bullish, but you kind of ask yourself, like why was that range created? So if you look at the daily, yeah, exactly. As I said, it's probably moving into a fair value gap. So moved pretty nicely into that fair value gap, rejected very roughly off of it. This is actually not the worst PA, to be honest with you, especially since Waves is kind of like a total shitcoin at this point. I think the real shift when structure was there, as far as displacement goes, it's actually really clean. I won't even lie. You'd probably refine this on a 15-minute a little bit. I mean, I would have probably just left it down here. Try to frame an entry around that. You could have waited for the 5-minute to give a shift, which occurred over here and over here, really. You would have got kind of stop hunted on that. I think the lower the time frames you go with some of these shit coins, the lower your probability also gets. But let's say, we kind of showed that shift. So now prices traveled back up. It looks like this order block was the zone that we really wanted. And then now price has pushed down, giving us that second leg of distribution. So, you might draw back up into something in this region. I like that right there. And that would be kind of your, that would be the next ideal sell area, in my opinion. I mean, this is kind of counterintuitive to the 1 hour chart. But I think that we'll draw into that weekly order block. I mean, to be fair, though, you have came into a premium. I mean, it's probably one I would sit out. I'll actually kind of watch this because I'm interested to see how it plays out. Because you came into a premium or a discount right here. This massive fair value gap probably can be refined. The first fair value gap I see in a discount is what we just tapped into. So, just looking at the 1 hour range, we've came down here and taken some of this internal liquidity. But when I look at this range also, I mean, it's really not hard to tell where's everybody's stop loss. And when it's that clean, even if we don't take the other obvious stop loss that's front running the weekly level, then still would at least like something down here to get ran, if not all of it. So we've missed the trade on USDCAD. Yeah, just give me a time frame, brother. I don't know. Because all I got was USDCAD long at fair value gap. I'm not sure if you mean like if you longed it before or if you're gonna long it sooner. Or can we discuss sushi? Yeah, sure. Yeah, give me a time frame on USDCAD. I'll go over it. This doesn't look too bad. Wasn't there some like fucked up news about sushi recently? Yeah, this doesn't look bad, to be honest. Came into that order block pretty nicely. And I would say that the weekly looks like it wants $2.15. This is actually super clean. What I would do if I was looking to get involved in this, though, I'm going to draw that range on the daily, just this impulse swing, which is most likely going to be our 1 hour range. It is. And I would look, it might not give you this, but I would look for something in a discount under these lows. I'll actually set an alarm for this one too. I'm trying to give you guys more crypto trades. I would wait. I mean, you very well might not get this, but I would wait for something in there under those lows. You could even refine this down to here. And I'm basing that off the daily and weekly chart because the weekly, just kind of paraphrase why I like this. I forget sometimes I'm just like, oh, this looks good, and I don't explain it. But we came to this weekly fair value gap. We had created this range here, right? We took the external liquidity. So now we would look for a reversion to internal liquidity near a premium. I'm not going to go all the way up here with it. But, when we look for that, when we get a market structure shift, which we got right here, nice displacement. I'll say this isn't really, but this nice big candle right there, we had this order block. And then now, we definitely have got some displacement. On the weekly, it's a little wicky. There's not many fair value gaps, but you can see how we kind of came back down, consolidated for over a month in this fair value or this order block. And now the daily has really started to show signs that it wants to go up. The first Pico entry have been somewhere down here in this fair value gap, or even I guess in this area, because you could have looked at that as confirming that weekly order block and just waited for price to come into a premium. It came into a premium, went a little deep, but then it nice big push. So overall, I would like to see a move. And you might not get this because there's a lot of liquidity it's drawing towards right now. Above really all these highs. Do this. I would probably put it right here. Or you could even just go for the low-hanging fruit as your draw, as these equal highs. And so ideally, I would like to see a push into this fair value gap, then go take that buy-side liquidity. But now let's say you take the buy side first, then I would probably look for a retracement, depending on how big of a move you make, just into a discount of whatever impulse move yielded that. Now, if we just mosey on up there and kind of do this number, take it, then I would look at that as that external liquidity being taken, and then I would look for probably this low, maybe because that would extend this range up a little bit to where, let's say we move up, I don't know, something like this, that would put that low in a discount. That's more or less a prediction, but kind of just giving you the game plan. Those equal highs. So yeah, I'm not sure if you were in here on the, or maybe this is like 15 minutes ago. So I probably already answered that about the equal highs. With crypto, I kind of take that stuff with a grain of salt. If it just rated liquidity, usually I'm going to execute, but that one ended up going and taking them. How do you mark a range? So let's just say you have a bunch of price action where you're just kind of moving around, and then you have this, and we'll do this to kind of make it even clearer. So leading up into this. Wait, forgive me, it's gonna be a little ugly. But so we'll say that we kind of had this move, just to make this clear. So when you look at this chart, or this little example, the way I would look at it is, what 2 points did we move the most abruptly away from? What gave the big impulse moves, right? I would say that this is it right there. So let's just say you're up here in a range and you form that swing high and get a market structure shift. That's telling you that price wants to come back down. Now, the probability is raised if you've taken the external liquidity, see how we came up and we made a high and then took it. So that was the external liquidity. It took that. Now you would look for it to come back down to a discount. Now, maybe there's a fair value gap right here that you would look for it to draw to. And then after it comes there, you would shift into your low time frames, start to look for those market structure shifts telling us we're going up and seeking out the buy side liquidity of the range. Now, you might, the more liquidity you have still in a discount, the less probable that you're just going to, rage all the way up to these highs. you know, something can happen like this, where you come up and let's say maybe there's a massive fair value gap right here, and price does this, bam, you know, then you've got lows here, and let's just say you have some kind of gap down here. Well, price might come down for all that and then move up. So the less internal liquidity you have in a range, the more likely that you are to seek out external liquidity from your entry. The more internal liquidity you have down below you, the less likely you are to go for the high. Link, let me look at link. Still no desire to go up, but I mean, as far as the week, you're in a short, so you're talking about the 1 hour. I won't go into like a full analysis. We went over link quite a bit lately, but it's got a pretty wide range here. I mean, to be fair, like, you know, if you look at this as your old range, which I think that's pretty clear, you know, that didn't get violated till this huge move. So we would, you know, almost look at this as one big range. As far as you know, this is a pretty wide one. But you came back up into this premium. You didn't really take out too much as far as internal liquidity goes. I think you still have reason to come up more, and you're kind of engineering that area of shorts right there. But I mean, if we're going to do it on a more aggressive, this is a tricky one. So you could also say, you know, that wasn't all a range. You know, this was your range, kind of formed a new one here, broke that, came up here, came down here, and then kind of moved around like that. I would actually, that's too much. I would just go with this. If I was in a short here, I'm not sure what your entry was. Does it say? I would be at least taking some off and de-risking for sure. Just because, you know, it definitely, you know, it showed desire to go down lower here with this shift. It came to that fair value gap, right? And it's coming down. I mean, I would maybe take some off. But I think overall it's probably going to draw down to there. Because you've got this nice fat imbalance right there. Could go lower. I mean, who knows? It could just go all the way to below the range, whatever. But I think that the immediate draw would be kind of down here. But I mean, you probably still see some more downside. GJ, good old GBPJPY. I haven't looked at this chart in weeks. Maybe I have for you guys, but I haven't looked at it in a while. Oh, it finally broke out of this range. Monthly chart almost tells me you went all the way up here, and that's kind of crazy, but you have a breaker right there as well, and this fair value gap. I mean, you could, low-hanging fruit would be up here as far as the monthly chart. I mean, that's still a pretty crazy distance away, but and just looking at the weekly, or the monthly, that's kind of what I see. That massive dump with the pound took this sell side here. I will say, though, it left a lot of equal lows down here. I mean, that could be preserved until later. You know, because we could end up, yeah, I can look at oil, Sensei, I got you. Yeah, so, I mean, definitely got a lot of equal lows down here. So that, again, I would actually probably just pop it right there to be safe. So that's probably going to be preserved for later at some other time. Maybe not anytime soon. this week's closure will tell us a lot. Now, for instance, if we just get above this, we just took this weekly buy side. And now if we start to shift under that and form like a daily swing high, I mean, I would almost potentially look for that before going up to that monthly area. But like low hanging fruit there would be, you'd look at it if we start to shift down, which it seems like nothing, no shorts on anything against the yen ever really last. But the low hanging fruit would be just to mark up this impulse move we made here. And then you've got a clean low that never mitigated this fair value gap fully. So you could also go down to the 1 hour. Really nothing too clean there except this low. So you could still focus on that at daily imbalance if we start to form that swing high on the daily. I mean, you kind of could look at this as a shift, I guess. It's not really these two candles are kind of nice displacement, but the way we react off the low originally, we didn't really leave a fair value gap. It's not the cleanest in my opinion. Overall, it does look like it wants to begin to draw down. Probably come stop out these traders right here. But again, it's not the cleanest. It's not something I would probably be involved in. I'd wait for a little bit more clear price action. When crypto pump? 2025. No, I'm just kidding. It's, I mean, I don't know what you define as a pump, like a bull run. I don't think till 2024 though. But I think we could have bear rallies very soon. And you're welcome, Gerardo, no problem. So let's look at oil for you, Sensei. So fair value gap fail. We talked about this yesterday. Like we said, there wasn't really an opportunity until we got a shift to the upside, which we didn't. This is actually a setup. I was talking about this in stock chat earlier. When you fail under these fair value gaps, and because we have that inefficiency where only one side of liquidity has been offered, but once we push through, we kind of have offered one side. And then once we come back up into the fair value gap, there oftentimes is a sell opportunity. I was noticing this on low time frames with indices. Now, this might be playing out what I was wanting to happen for a while, which was on the weekly, we have these massive equal lows right here. So you very well could be kind of pushing back. I know it's a crazy range. I literally drew it from 0 basically, but I think it was on a monthly. That's what I did. Yeah. Nice equal lows there. A lot of stuff going on in the world right now too, so oil's gonna be pretty crazy. As far as the weekly, it's not the cleanest, but if we look at the impulse range, you could look at this, meet clear on the daily, and we came right up into that order block and showed pretty clean desire to go away from it. And we're in a bearish range, clean out all that internal liquidity. So really the last point that I would look for along would be where we're at on this order block. Just go into like a 1 hour chart. There's a nice gap right here that you'll probably pull into once you get this close. This would be your lower risk area to look for long just because it's very close to invalidation. You're inside that order block. If the gap gets filled and you start to see a 1 hour shift to the upside, you could look to long, maybe to retrace some of this impulse move if it hasn't been already filled. But I would wait either for oil to come up into this area right there. Now, if it comes up there before tapping into this, depending on the price action, let's just say it goes straight there right now. That would be a good framework for a sell, and you could wait for your lower time frames to give you entry. Or if you do something like this and then pop up like that, I would just look to try to long up into that. So it really kind of depends what happens first. Now, if you form some structure here, manipulate traders into going long and stop them out, and we see smart money buy up those stops inside this gap with old orders, and you get that market structure shift, that's where you just look to frame longs around. Like that. Otherwise, you'd want to Wait till the shorts. Euro franc. I haven't ever even traded this pair, to be honest. He took this monthly low over here. A lot of liquidity got absorbed right there. If you could get a nice push on a weekly candle with a fair value gap above that, I mean, that would be pretty bullish as far as, you know, I would probably look for something in this fair value gap. And then again, because it looks like we formed this new range here on the monthly chart. So oftentimes what will happen is we'll get this little push, go to a fair value gap, then you take that external liquidity, and then you wait to see signs for something to actually make a move to the upside. Now, I will say, with the current state of the world, I'm not looking for a Euro bull run. But I would, as far as a macro perspective, if we get that daily, or not daily, weekly market structure shift there, I would say the monthly wants to pull back. Overall, I think this is your draw. Whether or not you're going to get that displacement break you need to have a bullish case, but I do think that's what you're drawing towards this week. Probably will get taken this week. If not, I would look for it to get taken next week. Now, on the daily chart, after that gets taken, you'd probably see some form of retracement. Now, it's just we're kind of anticipating here. But you got that fair value gap. So I think overall draw on liquidity right now is this high. And potential other areas, if we come back down into this area, you might be able to see some buys. But overall, I would say you're drawing towards that high. But after this range is broken, it is useless. I mean, no, not necessarily. It depends. Like I was saying, if you have something like let's say, you know, you have your range. Let me draw this again. I'll do it like this. So like, for instance, you know, before this break happened, let's do like this. Before that break happened right there, you would have said that, you know, this was your range. Right? And then theoretically, you could look at that as it being broken. Right? And it might have been, but if the price quickly falls back into the range, then you just, what I do is I extend this, because it's not really, this isn't a new range to me, that little leg in price. So I'd extend this, and I'd look at that as that initial external liquidity sweep. And then I would look for it to revert back to a discount. So now if price went, you know, to the freaking moon or something, then yeah, I mean, I'd say, okay, well, I'm going to take a look at the higher time frames and see, you know, this is what that tells you is that there's something bigger going on, and there's a reason it's not coming back down to a discount, and there's a higher time frame narrative at play. SPY, yeah, I'm going to use the ES chart just because. Same thing. Oh, for a second, I forgot I was on a daily. I was like, what the fuck? Thought I was on like a lower time frame. So nice push up. This is kind of the imbalance where NQ we wanted it to move towards. So overall, nice push there. Let's see on like a 1 hour what it looks like. Again, oh yeah, I'll show you, but I remember why that was marked. But overall, I think we could definitely draw back up into this before more sells. And again, it's the same model we use on the lower time frames. You get that market structure shift, and then price comes down. It comes into a gap. So we've hit one area liquidity. Remember, price is just going to bounce from one area liquidity to another. And if we get a market structure shift, you know, we look to build sells in the displacement fair value gap. So if we come up in there, you know, then you could go down to your 5 minute, your 1 minute, whatever you use. I would probably recommend a 5 minute to confirm a 1 hour. And you could look for sells. But whenever we're talking about establishing draw on liquidity on a more, being a little bit more agile with it and nimble and active to do it on a 1 hour chart, you know, we can say, okay, well, we came up here. And the overall draw we're looking for is going to be down here. But on a more immediate bias, and since price is fractal, we can view price from any time frame and kind of witness what's going on. Once you get the hang of it, you know, you can look at this 1 hour and say, okay, well, I think the overall draw is here. Does that mean we're going to have a straight just down move to it? No. Right? How did I confirm that? We got a market structure shift. So what is this range right here? That leg in price that caused a market structure shift is going to be a 5-minute range, or maybe even a 15-minute range. So then you look, just like we're talking about, drawing liquidity, we can go up here and say, here's our impulse move. What I would look at and say, okay, well, I'm looking for price to pull back up into a premium of this before selling off, right? It might not make it this fair value gap. It could just bounce off this little buy to sell range. I mean, I would look for the fair value gap on the 1 hour because that's my strategy. But again, it's like price comes down, right? Came and took an area of liquidity, kind of made a low there, took it. Now it's going to revert back to a premium. So it's the same ideology, just on multiple different time frames, and you can view what's going on. I can look at this, and it's really simplified the way it's taught. So for instance, like when we see a market structure shift to tell us that, let's just say, okay, draw that kind of fucked up. Should have started from the top. So let's just say that, and bear with me, my drawing skills. Let's just say there's a fair value gap, I don't know, right here. Just keep it simple. And this is the 1 hour chart we're looking at, we're imagining. Well, this market structure shift that is indicating us, or to us, on the 1 hour that we want to go higher is indeed a 5-minute range. This is a whole range, just like you're looking at this on a 5-minute. This on a 1 hour is going to be something like this. Or I'm sorry, on a 5-minute, is going to look something like this. So when you look at this and you'd say, okay, where's your range here? Okay. So just like we're looking to come back down to a, let's say you get that shift and you look for the discount fair value gap. We'll say we have a fair value gap here. And we'll say we have a fair value gap here. We know we want to look for the discount one. Now, why is that? It's the same reason whenever we're looking at a range here that we want premium. Well, if we're looking at this 5-minute range, we don't want this fair value gap. We want this fair value gap. You see what I mean? So the ideology of a range is just that the algorithm is driving price to areas of institutional order flow at a market extreme relative to the current range. And this is kind of more of an in-depth look at, range. I guess I'm trying to think of the way to say this. I hope this makes sense, because this is I don't mean to toot my own horn, but I'm glad that you asked, I don't know how I even got on this tangent, but this is a really good example of fractal price and price delivery with and relative to the ranges. I just saw this question about GJ. I'm actually going to keep this on I might make an infographic out of this. It's pretty, not too shabby. BJ, last monthly bullish order block. It's funny you asked that. What are we on? We're not on this one? I would say, the last one's already really been capitalized. It was this one. But I mean, when you're looking at, theoretically, I mean, we've traded through this down candle. It's the, I wouldn't really look at this though, just because this nasty candle. But some would maybe consider that. I would just consider this right here. I mean, technically speaking, it would probably be this candle or this candle though. This is one where it's kind of like, it's kind of odd. Cheddar cheese, how do I calculate my stop loss to be like 1% of your port if that's all you want to risk? KuCoin says, like the amount you'll lose when you put 1% loss, but MT5 doesn't do that. Do you have to calculate it? Yeah, I do. So for instance, I mainly trade indices. So let's just say on this trade, it's a good example. So I'm going to look at this, $8.50. So for my broker, and this is assuming you have a contract size of 1 because I'm on my Forex funds and the contract size is 1. Now it might be different if you're on FTMO, I think it's 10, but just assuming a contract size of 1, when I open a 1 lot, that means I'm opening 1 unit of this asset. So if the one, I own one of these, if it moves $8.50, then I'm going to lose $8.50. So for every 1 lot, I'm risking $8.50. So let's just say you wanted to risk $850. You'd risk 100 lot. Makes sense? Hopefully. Zero said you saw people are using a range even after it breaks. I mean, there's a lot of different ways you can use them. You can use range deviation. Like let's say you have kind of consolidation range and you say, okay, well, people will play these trades a lot, which is similar to what we're just going over, just a different way of saying it. But you'll have, this, and then you'll see that range deviation down. I've seen people do that a lot. There's power of 3. I'm not sure. I can't really speak for what other people, their logic behind it. What I've gone over is just the way I would look at it. Can I check XMR? Yeah, sure. I haven't looked since it took. I actually played out kind of nice. I had this PO3 marked. This was a while ago. My target was too extended. Should have just been down there. It was played out pretty nicely. One of those equal lows distributed above these equal highs. Not too much on the monthly here. I would count the wig in this example. So decent move off this order block so far, came under these equal lows, but no sign really to me. I guess not really like an entry type confirmation on the weekly, but when you look at the weekly range that we pushed us into this low, we already came into a premium of that, the weekly impulse move. Now, I know the weekly range, you could look at it in a broader sense, be clear on the daily here. And see how easy it is. Once you look at it like that, you look at impulse and kind of like figure out where the meat is on the bone, so to speak. I can look at that and I can tell you that's going to be a daily range. We go to the daily, it's a daily range. So again, talking about ranges. Remember, we have a bearish range here. So whenever we have liquidity in a premium of a bearish range, we look for all that internal liquidity to get swept up. Now, it looks like not every last bit did. So theoretically, we could say, okay, well, price is going to come back up to this high. There's a high possibility. We could also say, oh, it reacted here. It showed signs that it wanted to go lower. Then we kind of had price pull back up into this order block right here, or rejection block. I'd call that an order block. Maybe I'm wrong, to be honest. That's one I'm not clear on because it has a large wick and it was kind of rejecting off of probably some kind of lower time frame imbalance. There are calculators, Vanch. I should have said that. I just don't. I think that it's like when you're day trading, like trying to use a calculator, I think you need to learn how to do it on your own. Like I actually have a whole video. If you go to my channel, how to size positions to maximize profits. Cheddar cheese. I should have recommended that, but that will teach you how to do it in your head with crypto leverage trading. I don't think that calculators are good to start, but I know that when I'm day trading, I don't want to sit there and go on another window and a lot of times with the entry models I use, I barely even get in the trade because it's kind of like trying to wait to that last second of confirmation. But yes, there are calculators. But here I would look at this kind of like as the second leg of distribution. So price, we have this, price came up, are these equal highs? It's not really showing a strong desire to go down yet. Almost like it wants higher here. Get some buy side there. Kind of interesting. I'm going to jump down to a 1 hour to kind of tell more about this. I actually like that a lot. I'm going to set an alert for this too. Hopefully I see it. I literally, I don't know, my trading view alerts, like either I'm just like terrible at noticing them, or I think what the problem is, I have them on for a rate indicator. I need to turn them all off because that rate indicator isn't really helping too much. I don't think I've used it in weeks. I just get alerts, so my brain's kind of just filtering everything out. But I would look for, if we get it back above that high there, that would be a very nice sell opportunity. If we start, get above that and watch the 5 minute or even a 15 minute to start shift structure down. Because to me, yes, there's that up there, but I see this as, a nice prime market maker sell model on like a 4 hour. Have this consolidation, a second consolidation, then you get that smart money reversal, second leg of distribution up in this area is going to be, and it's probably right around optimal trade entry too. Yeah, I really like this actually. I'm going to add this to my watch list. Kind of counterintuitive to what the rest of crypto is doing, but XRP, or not XRP, I'm sorry, XMR usually is. Yeah, I like this idea. Right, forget on a daily chart. Yeah, this is actually really nice. So I'm gonna keep an eye on that for price to come up into optimal trade entry into that 1 hour fair value gap and raid these highs. And then if I get 15 minute or a 5 minute displacement break of structure, I'd probably look to enter some swing sells. And like the main targets would be like under this area down here in this imbalance. And you could target lower, but again, I'm all about low hanging fruit. Dealing range, and that could be a term that term's thrown around a little bit. There's central bank dealing range, which is a certain time before midnight. It's funny you said something about that. I'm actually going to be teaching a class on that pretty soon in Playbit. But basically, there's also the term that this impulse move is a dealing range. Again, as in smart money, a lot of terms just kind of get thrown around, and it confuses people. But I try to keep them as consistent as possible. To me, what I'm talking about, impulse range, would maybe be what you're referring to. Also, Trek Steady, I just now saw he's not even in here anymore. And silent crypto is just crypto. It's lagging along. Take a look at Bitcoin, then I'm gonna hop off. I think overall it wants this imbalance. I know we've been saying that for what, a month now, but and maybe we might get what I wanted with this 1 hour range here. Seems like that's definitely kind of making a push to the downside here. It doesn't look bad, to be honest. Earnings are this afternoon as well. The answer to these questions before I get off here. What do I think should be the minimum number of trades in back testing? 30 trades. So 30 trades will have around the same results as 1,000 statistically. In what time do kill zones occur in the crypto market? Same as they do everywhere else. You can get an indicator that'll help you with that. The main kill zones that I focus on. Let me see favorites. Thought I had one. You could probably type in ICT kill zones and find an indicator, but the ones that I focus on are going to be 2 a.m. to 5 a.m. Eastern time. That's the London Open kill zone. And 7 a.m. to 9 a.m. New York time, which Eastern time. I don't know why I said it twice. Everything I'm saying is in Eastern time. 7 a.m. to 9 a.m. That's the New York kill zone. And then you have 10 a.m. Some people say 10 to noon for the London close. I'd prefer going by 10 to 11 a.m. for the London close. That's really where I focus on. I know I've seen people talk about the New York close kill zone, and I know ICT has gone to a bunch of different stuff, but in my opinion, that's where the value lies. In my opinion, but yeah. So, well, I appreciate you guys, and I will see you all tomorrow at noon. If you have any questions, at me on Twitter, message me, whatever you want to do. If you could like and subscribe and comment to this video, it helps me out a lot. And then if you want to start a free trial to the Discord, there is a link in my description that you can use the code Casper, and you'll get a 5-day free trial. So until tomorrow, I will see you guys later. Peace.